Welcome to the Times of Industry show. I have a really good show for everyone today. Normally, our shows are all about the national debt and inflation and who's going to win the next elections, macroeconomic stuff. And that's really important. That defines everything about your portfolio, where you put your money. Are you in cash? Are you in gold? Are you in stocks, etc.? Are you in real estate and otherwise? But today I have a lot of added value because we have a CEO of a company just recently IPO'd. And what they do is they're in the business of revolutionizing food. And that's something that a lot of people do not understand because food is, it's been around since the first person has ever walked the planet. So it's kind of a given. But just in the same way as music has been around since the first person uttered sounds out of his mouth, but then Steve Jobs revolutionized music and created a company that is over $2 trillion today in market value. Food is a very interesting industry because it has very little innovation until recently, until what we're going to hear about today. And I think that's very important information. So I'd like to welcome Mitchell Scott, who's a founder of the Very Good Food Company. It's a publicly traded company, as I said, both in Canada and over the counter. And I really am excited to be speaking with you, sir.
Great. Thanks very much for having me.
Okay, so let's talk about this revolution.
Yeah.
Can you define the food industry and the market that you're trying to penetrate with the company? But let's not talk about the company. Let's talk about the actual industry.
Absolutely. So I think especially over the past few years, there's just been a major shift in the way people are eating and consuming food. And I'm sure you've started hearing about it more. People are eating plant-based foods. So instead of meat or dairy, they're looking at alternatives. And they're doing this for a number of different reasons. The kind of key reasons are environmental. So plant-based foods have a lot better impact on the environment. They use less resources. Ethical, so people who have problems with the kind of large-scale agricultural operations, the farming operations, all these things that are just really not great for the animals. And then the third reason is just health. So most people kind of come to plant-based eating based on one of these three pillars. And recently, there's just been some really great innovation in the space. You've got plant-based food products that are looking and tasting more and more realistic and are really just providing a superior experience. So we've got plant-based meat alternatives, dairy alternatives, the kind of whole spectrum of animal-based food products is being revolutionized with plant-based alternatives.
Where, in terms of the size of the market, okay, where is this plant-based foods coming from, and how diversified can it go? Is it just lunch? Is it lunch, breakfast, and dinner? I mean, what kind of size of market are we talking about and what's been already the reception? Is this already very cost effective? Because as you know, with electric vehicles, for example, obviously everyone sees that the world is going there, but the main thing is the cost. If I always like to go back to that example of an American family running an American petrol station, and it says, gallon of gas at this amount, and then you have a Chinese petrol station, it's selling for a third, and the American family is like, buy American, buy from us. But if you're a consumer and you can buy for cheap, the same petrol, you're gonna go there. So, and that's driven the whole outsourcing and the boom in China for the past 30, 40 years. And people just do not understand why the middle class in America is going away. And it's because of cost. Is plant-based foods starting to penetrate because the costs are good? Because I assume real meat or meat replacement, the meat replacement can be much cheaper. And then it's all about text and texture. So can you talk a little bit about that?
Yeah, so I think that, the most important thing is the taste and the texture. Like it's got to be on the same level or better for people to want to switch. So that's kind of the first thing that's just kind of been solved over the past few years with some of the innovations in food processing technologies. Next big thing is absolutely cost. And I think overall, some brands are almost cost competitive, and their goal is to be cheaper than the meat alternatives within the next few years. And the reason behind that is just because basically the inputs are cheaper. Like for our products, for example, we use beans, veggies, herbs and spices. So those inputs aren't very expensive for us. Whereas if you're raising a cow or something, you need to get these vegetables, feed them to the cow, raise the cow for months at a time, go through the whole slaughter process. So it can end up being much more expensive. So I think as these plant-based companies scale up their operations, achieve economies of scale, they're going to be price competitive or cheaper than the meat-based counterparts, and they'll have that kind of very similar taste, texture, and experience. So I think once that happens, and is when we're going to see a really, really massive shift. We're already seeing, I think, a big shift as people realize these environmental, these health, these ethical benefits. I think that's just going to accelerate as the price comes down and as these products become more mainstream.
Understood. Okay. So now I want to ask you about the company that you founded or co-founded, the Very Good Food Company. So you started out, and just correct me if I'm wrong, you started out with one retail location in Victoria in Canada, correct?
Yep.
And that store was basically a physical store. You come in, you buy products, and you go home and you cook them yourself, correct?
Absolutely. So we started at a little farmer's market. From there, we opened up a retail store. The idea being it was a vegan butcher shop. So you come in, you get your meats, your cheeses. We also had a little restaurant attached to it. So that's how it all got started. And we realized that there was a huge demand for these products, for these kind of handcrafted, high quality meat alternatives, just with clean ingredients and just a great nutritional profile. So that's how it's all started. From there, we've kind of expanded where we sell online e-commerce across North America. We're in hundreds of retail stores. We've just opened up a new production facility. So we've really just been struggling to keep up with demand for our products and scale up our operations.
So a very famous story with Warren Buffett was that in the 60s or 70s, doesn't matter for the sake of the story, he was negotiating to buy a company, and he was concerned about a few $100,000, and he ended up not buying it. It became a very big success. So his analysis of the company was correct, but then he got cheap on a few $100,000 where the company became a multi-billion. And I understand that Dragon Dance, which is the equivalent of Shark Tank, they came in, two of the participants wanted to fund the company at a valuation of what, $7 million?
Yeah, it was $7.5 million.
The market cap of the company is like 100 million today.
Yeah, I think around 100, just over 100 million. Yeah.
So they potentially could have made 14 times their money, but they try to lowball you after the show or something to that nature. I assume because they're venture capitalists and they couldn't help it. But exactly. Can I ask you? Okay, so you go on Dragon Dance. It doesn't fall through.
Yeah.
Are you growing because of necessity? In other words, too much demand, too much consumer coming back. Is it organic people just looking for more and more and more, telling their friends, etc., and then you had to simply grow? Is that basically how it happened?
Absolutely. So I mean, the main issue is we're production limited because we kind of bootstrapped everything. So our production process was very labor intensive. At one point, we were rolling sausages by hand, pressing burgers by hand. So we needed equipment to scale and to grow, and that equipment was expensive. So that's why we kind of went to Dragon's Den and to these other kind of fundraising opportunities to scale our production. And yeah, I mean, most of our growth has been organic. We've got, retailers we've got a waiting list of 50 to 100 retailers that want to carry the product, but we can't keep up with that demand yet.
Okay, so and then as luck would have it, somebody orders it to their Vancouver home, loves it, and wants to be a major backer of the company, which is a fairy tale story for him and for you guys, because you're public now, and now you're tapping into the global stock exchange, and it's been doing very well. The IPO has been great. The stock is up about, I think, over 50% since the IPO day, since the first day. Is that?
It's actually about 600%, I think, or 500%. So we IPO'd it at 25 cents, and we're at, I think, $1.65, $1.70 today.
Yeah. Okay. So at $1.70, let's run the numbers a little bit here. And for people who are listening to this, the margins for a meat replacement opportunity is, as you said, you're producing basically beans and some seasonings, and that is far cheaper than the real meat. So that's beautiful. And then the fact that you have loyalty
Yeah,
means that you can charge a premium because it's artisanal, etc. What
absolutely.
are
Yeah.
the margins that a very good food company has compared to traditional food companies?
Yeah, so we're generally operating, on a 40 to 50% gross margin. And obviously, as we scale up and get economies of scale, that's going to improve. Traditional food companies generally more, thinner margins. You're in the 10 to 25% range. I think what has helped us operate in those margins is we have this high quality, this kind of premium positioning. We also have, kind of multiple sales channels. So we have our own direct to consumer sales channel with online where we can sell and capture basically the full price there, right? As opposed to, give it to a distributor who gives it to a retailer and there's a broker. So you've got three different middlemen, taking a cut before it ends up at the consumer. So by going direct to consumer, we can really kind of help maintain healthy margins.
Okay, and it's going to be very difficult for new entrants to come in and erode those margins because it's very difficult to start a company like this and have such a good brand loyalty. You've been doing this for 4 years, correct?
Yeah, so we've spent 4 years basically building our community, doing outreach, kind of just building a loyal tribe of people who kind of love what we're doing and support us with new product launches and invest in our company and kind of do the whole sphere.
Okay, so how much meat in pounds is produced per week in Victoria right now? Is it, I believe it's 8,000 pounds a week?
Yeah, so we actually just recently we've increased our production schedule
Okay.
and brought in a graveyard shift. So I think we're at around 10,000 pounds a week right now.
Okay, so 10,000 pounds a week, that's 40,000 pounds a month at around $15 a pound, correct?
Yep.
Okay, so that's $5-6 million Canadian a month, correct?
Per month, no.
40,000 times, I'm sorry, $500,000, so 600,000 a month.
Yeah, 600,000. I was like,
which is annualized. It's around $7 million.
Yeah.
And the Victoria facility that currently runs on 10,000 can scale in the next few months to about 25,000 a week.
Yeah, so that's what we think the max target's going to be. We're just in the process of upgrading our electrical supply, getting some new equipment in, and then kind of putting more people on those shifts. So that's where we think it's going to max out at about 25,000. So just over $1 million a month in top line sales out of Victoria.
Out of Victoria alone, and then you're already financed for another facility in Vancouver, BC, correct?
Yeah, so we've signed a lease for a facility in Vancouver. Production-wise, it's about twice the size. We're going to be putting in more automated lines. Top line revenue there should be around the 60 million range or so once we're fully scaled up.
Okay, so between them,
Yeah,
between the both of them, we're talking about how many pounds a month?
yeah. So you've got
100,000 in Victoria and about 400,000 in British Columbia. So that's about 500,000 pounds a month.
Absolutely, yeah.
Yeah, at $15 a pound, you're making about 7 million a month. Annualized, that's 100 million in revenue from those two in Canada alone. Is that correct? Yeah?
Yeah, that's correct.
And the market cap is around 100 mil today.
Yeah, that's correct. So, I mean, for us, the biggest thing has always been production, scaling production. We've always, we've had the demand there. It's just a matter of, getting the financing ourselves, and then it's a matter of executing and operations and scaling up.
So I love companies with backlogs. Usually it's government contractors, military contractors. They get a huge backlog for their whatever ships or trucks. This is a backlog of meat replacement foods, which is even better because people need to eat all the time, and you become a regular consumer. And correct me if I'm wrong, but the way I think about it, your demographics have to be younger for the vegan. So your life of consumer is even longer than traditional food companies that appeal more to the baby boomers or Gen X. This is, I'm sorry, yeah. So this is going down to millennials type or young families, etc.
Absolutely. I think like here in BC anyways, millennials are the kind of the biggest group of plant-based or vegan consumers.
Okay, and recently, Mitchell, huge news, you are entering the United States, which is just, I think, a little bigger in terms of food consumption in Canada.
Yeah.
What's going on? And where is this location in California?
Yeah. So, I mean, for the past, I'd say year or so, we've done e-commerce into the US. So, we're shipping out 1,000+ boxes a week. So we already have customers in the States, and it's been kind of expensive to service them. We're shipping via airmail. It's going through customs. It's been a bit of a pain. And we've also had a significant demand from grocery stores in the States for our products. So we basically kind of come upon this opportunity. We have a big facility there. It's ready to go for food production. It was food production before. Basically just needs some minor renovations and new equipment put in. So we just signed a lease for that a few weeks ago. It's in Patterson, California. So very strategically located to be able to service the entire west coast of the US, kind of anywhere west of the Rockies within a few days for our e-commerce shipments. And then also it's got enough capacity to produce for grocery stores for, a large portion of the United States. So it's 25,000 square feet, and we've got a right of first refusal on an additional 25,000 square feet.
And Mitchell, is that facility, can it do 2 million pounds a month?
That is the top line. Yeah, if we get a few different lines in there, we should think we'll be able to scale it up to there.
So 2 million pounds a month at $15 a pound, that's $30 million in revenue a month. That is a game changer for the company, obviously, because it's just the revenue is about 350 million a year. That's 3.5 times the market cap of the company. When are you going to start producing out of there and start selling?
Yeah. So we're hoping to be up and running there with at least one line within about 6 months or so. So we've already started working on the plans, ordering equipment, getting that whole process started. I mean, it's not going to be overnight. We go from doing zero to doing, $30 million a month there. It's going to be a scale up process over probably, 1 to 2 years. But yeah, we see a ton of potential there, and a lot of our customers are already in that area.
Okay, so obviously everyone watching this is going to be asking the most important question. You're the co-founder. There's another co-founder. How much do you guys believe in your own company? And so the best way to ask that question is, how much do you own of the company? Because if there's a very heavy insider ownership, the shareholders and the major shareholders are in the same boat. So how much do you both own of the company?
Yeah, so combined, we own around 33% of the company.
Okay, and just to give people an idea, a company like Walgreens that has a large shareholder who was CEO, that is 16% of the company, and that is considered unbelievable in the public markets. For somebody to own 16% or 18%, if you guys are not equal, but together a third of the company, that is a very high number. And I assume both of you seeing the potential, you're not even worried about that right now. You're worried about building the company. I wonder if you're going to increase the product line, or can people, because if you go on the website, there's like a 4-week wait to get your foods. It's the demand is so high. Can you tell people a little bit about what are your favorite products that people love, and a little bit about that UX expansion? Are you thinking you're going to be in Whole Foods? Who are you kind of working with, etc.?
Yeah, absolutely. So in terms of, products, we've got everything you might see in a traditional butcher shop. So we've got, burgers and sausages, which you may see in other places, but we've also got pepperoni, steak, ribs, taco stuffer. My favorites probably are pepperoni and our steak. In terms of the US expansion, we're still kind of formalizing the plans. Obviously, it's kind of de-risked because we already have that large customer base of online subscription-based customers. So we already have a market for our products there. And we have had initial discussions with larger chains kind of on the West Coast. So I'd expect in the next few months, we'll be making announcements around, retail rollouts in the States as well as timelines.
Okay. Okay. So I want to ask you, people that have tried your food and then the competitor's food, what has been the sort of the comments, the reviews, etc.?
Yeah, so we get people who say they prefer ours. We get people who say they prefer the other ones. I think our ethos has been we're trying to create a really tasty alternative. We're not trying to exactly mimic the taste of meat and have something that bleeds and has all these additional additives and other junk in it. So we just want a really clean, delicious, tasty product that kind of everyone can enjoy.
Okay, so I want to really, in sort of wrapping up the interview, I want to ask you about if you're addressing shareholders, if there are shareholders, existing shareholders on the call, what would you like to transmit to them or communicate with them? And if there are people that are just looking at owning a piece of this business, which is obviously a high growth business, and they're looking to assess that because they're looking at many alternatives of what to do with their money. It's a stock market of 5,000 publicly traded companies and et cetera, just in North America. So, what are some of the key things that you can say about yourself and the way you run the company that people should know?
Yeah. So I think the biggest thing is, we are really kind of we've been around for 4 years, but we're really just getting started in terms of scaling up. So we had 2 or 3 years bootstrapping to get a really strong product, find market fit, start building that community. So we know this product is going to sell. And it's really just a matter of producing more product and getting it out there to market. So I'm kind of laser focused on our operations, on scaling up our marketing, on building out our executive team, on really kind of turning this into a big company that's going to be, $1 billion plus company in the next couple of years.
Can I ask you, if it's public information or something, can I ask you if you've been approached already by companies that are interested in doing some collaborations, are strategic, are bigger, and they're just watching? Have you seen any executives from competing companies maybe just waltzing in your stores, just trying out the foods a little bit here and there, and you?
Yeah, we've absolutely had some of that kind of stuff going on. We've also recently kind of brought on a few people from other companies who actually reached out to us about joining our company. So it's from some of the larger plant-based companies here in British Columbia. So we really are starting to get a kind of a wealth of knowledge and experience on our team that's going to really set us up for future growth.
Mitchell, this has been really great. And I'd like to ask you, if people want to check out more, is there an investor presentation that they can check out? And do you have like a manned call if people want to get more questions answered at the company, et cetera?
Yeah, so you just go theverygoodbutchers.com, and then right at the top there's an investors page. And on that, you can download our latest deck, and there's also an investor phone number and email, so you can contact that. You talk to our corporate communications manager, Kevin, and he'll have answers to any questions you may have.
Mitchell, thank you very much for taking the time. And I really am rooting for you guys. I hope that you will build a very successful company that pleases their customers and delivers real value to their owners, their shareholders. Thank you very much.
Thanks a lot, Leo. I appreciate it. All right, have a good one.